Thank you. Senator Ron Wyden has spent 35 years serving the citizens of Oregon. He was elected to the U.S. House of Representatives in 1981 and to the U.S. Senate in 1996. He is currently the ranking member of the Senate Finance Committee and has also served as chair. Senator Wyden is known for his bipartisan approach to legislation. He co-sponsored tax reform legislation with Senators Judd Gregg and Senator Dan Coates, and Medicare reform legislation with Paul Ryan, for example. He's not afraid to stand up to the Obama administration or congressional leadership. On his Twitter page, he opposes the FBI's demand that Apple help the government hack a terrorist's iPhone, and he rebuked Senate leadership for refusing to consider a nominee to replace the late Supreme Court Justice Scalia. Besides for his intellect and passion for good policy, the thing I like most about him is that he is an optimist in a city where cynicism often passes for wisdom. He believes that bipartisan tax reform is possible, and he's in a position to help make it happen. Finally, my favorite fun fact about Senator Wyden: he holds the unofficial congressional free throw record, making 47 out of 50 baskets in the House gym, which is especially impressive given that his former colleague, Senator Bill Bradley, was an NBA Hall of Famer and one of the better free throw shooters in NBA history. Senator Wyden is a much better basketball player than I am, has been a tireless champion of bipartisan tax reform, and is never boring. It is a great pleasure to welcome Senator Ron Wyden.
What an inflationary introduction. The Tall Guys Caucus always sticks up for each other. And Len, thank you for inviting me. I'm going to make this a filibuster-free zone today and just offer up a few thoughts to get us going, and then I think we're going to have plenty of time for questions. Obviously, the presidential election is now only 8 months away, and I think it would be fair to start by way of saying that on the home front, the dominant theme is anger. Anger particularly about where we are in terms of our economy, and millions of Americans are simply feeling disconnected from our country's growth engine. They just don't feel that they're a part of it. And I would just say, when you kind of strip it down, there's anger at the disappearance of good-paying jobs in industries that were once the pillars of the economy, anger at the costs of childcare, housing, and college that just keep soaring through the moon, anger at having to stretch every paycheck, and anger about how you just never get ahead and you can't build a nest egg. And I want to start today by saying that when it comes to this country's tax code, there is a lot to be angry about. And I want to begin by saying that it's my view that our country on taxes is offering a tale of two tax codes. There is the involuntary system that most of our people deal with. If you work the line at a factory or put in a 9 to 5 at a cubicle in an office building, your taxes come straight out of your paycheck once or twice a month. There are no special dodges, no clever strategies, no cutting corners to escape paying what you owe. Now, there's a different system for the well-connected, one that has been warped by clever accountants and lawyers at fancy white shoe firms, and it's got a full array of tax-dodging schemes. You can call them wash sales or collars or swaps or derivatives, but slippery definitions of capital gains and income abound. And make no mistake about it, under this part of the tax code, with the right advice, you can pretty much pay what you want when you want to. So building on a report I released last year on how tax pros game the system with sophisticated financial instruments, I'm now working on legislation that goes after this issue head on, goes after it and fights inequality in our tax code as represented by this tale of two systems. It's all about ending a system that, in my view, has a great disparity between taxes on wages and taxes on wealth, and it's all about cleaning out the complicated web of rules and loopholes that just is wildly unfair to the typical American taxpayer. The spotlight of the presidential campaign has begun to shine a little light on this unfair, overly complicated system, and I'll start by telling you it absolutely has to change. And it's important as we begin this debate to remember that Ronald Reagan, nobody's idea of a liberal, signed a law that equalized the treatment of income from wages and wealth. But if you hop online today and you read the details of the tax plans that have been released by the Republican presidential candidates, you will see unbelievably regressive proposals with astronomical price tags of trillions and trillions of dollars. And so here's my take on where those campaign proposals are going. I have a better chance of playing in the NBA than these multi-trillion-dollar tax giveaways have of passing in the United States Senate. The tax code is an overgrown, infested mess. There are cobwebs of complexity woven into every one of the dark corners. That complexity, in my view, is what drives so much of the unfairness and the inequality, and it is slowing down our economy. The answer is not to hand out trillions of dollars to people who don't need the help, as the Republican presidential candidates have proposed so often. The answer is to drain the swamp, folks. It's to clean up the tax code in a way that gives all Americans a chance to get ahead and strengthens the economy. My view is you ought to start with radical tax simplification. By radically simplifying the tax code in key ways, policymakers can go a long way towards ending this unfair two-tiered system and addressing many of the code's chief problems. So let me take just a couple minutes to talk about where the country and the Congress ought to look. First, let's talk about saving for retirement and paying for education. I believe young parents just starting out should not have to spend days and days trying to parse the difference between the many types of retirement savings vehicles. I sponsored a bipartisan bill a few years ago to make the choice of how to save for retirement simpler, and I continue to look at ways in which to develop bipartisan approaches to make it easier for working families to save. And I believe those same young parents, when they're thinking about trying to pull together savings for youngsters who will go to college, should not have to go through dozens of calculations to figure out which tax incentives are going to deliver the most benefit. Now that the American Opportunity Tax Credit, one of my priorities, has been made permanent, Congress ought to take the next step to simplify our entire portfolio of education tax incentives to address three concerns: help people save, cover tuition costs, and pay their loans. Second, I think it's time to clean up the business tax rules, because obviously it's not just on the individual side of the tax code that is too complicated and too unfair. There are enormous challenges to address with business taxes as well. For one, I believe that an entrepreneur's ingenuity and sweat equity are much better spent growing their company than shuffling through paperwork in order to figure out how to comply with arcane accounting rules. Starting and running a small business shouldn't require an applied mathematics degree. And as those small firms mature and grow, they shouldn't have to spend half the year or more working through the math on depreciation. So I am developing a proposal that will simplify that system as well. Instead of 100 sets of depreciation rules, I want to get it down to a handful that are easy for our businesses to work with. And businesses ought to be able to average out the useful life of their equipment instead of having to use a separate schedule for every single item in their inventory. Next, let's turn to energy for a moment. I believe our tax code ought to be centered on the goal of helping to build a fairer and more affordable low-carbon economy. But today, the code has a Byzantine, uneven patchwork of more than 40 different tax breaks for various technologies, fossil and renewable. They've all got their own rules. They've all got their own definitions. Some technologies get a lot of taxpayer investment. Others don't get much at all. Some breaks are permanent. Others are temporary. So I have already proposed legislation to go from 40 energy tax breaks down to 3. So we're eliminating well over 90% of the energy tax breaks, and we would have 3 based on common sense goals: cleaner power, cleaner transportation, and greater energy efficiency. This approach would not only cut down the number of energy breaks, but my hope is it'll be particularly appealing to both sides of the aisle, including Republicans, because we cut the cost of current energy tax incentives in half. And at one point, I was chairman of the Energy Committee, and I heard a lot about energy subsidies. We're proposing to cut them 50%. You'd make energy policy far simpler, and it would put the country on a road to a low-carbon future. Now let me turn to the question of the international challenge that I know you've been talking about with some of my colleagues already. Today's international tax system, if unchanged, is going to siphon much of the gas out of America's economic engine and just send it overseas. My view is it ought to be replaced with a system that encourages Americans to innovate here, to make things here, add value to them here, and then sell them to the 95% of the world's consumers who live outside the United States. Our international tax system now traps capital overseas instead of drawing it back home. Against all common sense, it creates unjustifiable tax windfalls for companies that move to the Isle of who knows where. There they can produce and manufacture, again, abroad, sell their products back into the United States. And the biggest danger of the international tax system, in my view, is that it drives bold entrepreneurs with transformative ideas from the United States. And I have a very real concern that if nothing happens to the status quo as it relates to the international side of tax law, our best and brightest are more likely to build the next Silicon Valley between Oxford and Cambridge than between Eugene and Corvallis. So here are my principles for international tax reform. First, our corporate tax rate has to become competitive again. Second, the code should attract investment to the United States and reward those who create red, white, and blue jobs, not those who can game the system. And third, international tax reform must yield real revenue for infrastructure investments in our country. In my view, an international tax reform plan built around these principles is something that could be called a territorial system without the gaming. The right set of anti-abuse rules can crack down on mind-numbing strategies like the double Irish with a Dutch sandwich and end the race to the bottom. A code that eliminates barriers to investment and helps the United States compete will strengthen our economy and create good-paying jobs. And as long as the rules are tough and there's revenue for infrastructure, this is a proposal, I believe, that can bring Democrats and Republicans together. For example, the Finance Committee's bipartisan working group on international reform, led by my colleagues Senator Schumer and Senator Portman, basically agreed to this framework that I've just described. Chairman Hatch and I knew that Senator Schumer and Portman would be able to move the ball forward. That is why we asked the two of them to lead the effort, and it's my view that they made very real progress in their work. Now, with that said, I think there is no doubt that with election year politics, you're not going to do a complete tax overhaul between now and the end of the year. I also feel that Congress is not just supposed to take a year off, and that's kind of guided some of my thinking in other areas that Len mentioned. I don't think the Congress can afford to wait until 2017 to address several of the immediate challenges, particularly the ones on the international front. It is vital that Congress triage the inversion virus and the ramping tax gaming that we have seen that erodes our tax base. You simply cannot ignore the way inversions and other M&A activities have infected the American economy because it is an election year. With firms that have already inverted now gobbling up more American companies, there is a dangerous type of feedback loop developing. It threatens to winnow down our tax base more and more. And as that happens, it's going to get even harder for policymakers to make fiscally responsible business tax reform that's going to deliver any sort of meaningful boost to our economy. The Congress has got to take steps to deal with this emerging crisis, and there are a number of ideas that deserve consideration. For example, it's my view that the foreign company on one side of an inversion ought to own much more than the 20% of the American firm it's acquiring. The Congress ought to increase that requirement to 50%. In addition, it should not be so easy for inverting companies to bend the rules around transfer pricing or to strip the value and earnings out of an American firm by loading it up with debt, which, of course, American taxpayers would end up subsidizing. And I think our tax laws also ought to be tougher on what has come to be known as spinversions, hopscotch loans, and other games that enable merging firms to head for the exits without paying their fair share. So I am putting together a proposal on this front that would combine many of these ideas into one package to crack down on inversions and the tax games so as to preserve our tax base as we look beyond this inversion virus to broader reform. The fact is, the inversion virus has once again leaped from the back page of the business section to the front page. Americans who see the headlines understand that much of this is a symptom of a very diseased tax code, and it is a bad deal for taxpayers in Oregon and across the country. But an international reform plan that ends the gaming, invests in our crumbling infrastructure, attracts more investment, and creates red, white, and blue jobs is one that I think the American people will rally to. Now, I want to wrap up. When I was coming in, Lynn and Bill said, Ron, try to be positive. You know, we heard all these, oh my God, doom and gloom, Western civilization is going to end. I continue to be optimistic that there can be bipartisan tax reform. Hammering out the details, getting people together on the final numbers is not going to be a piece of cake. But I do believe that there's an opportunity to create what I call principled bipartisanship. You know, bipartisanship is not about taking each other's bad ideas. Principled bipartisanship is about taking each other's good ideas. And against all of the odds, Democrats and Republicans figured out how to do it last December to pass a major tax agreement that delivered some real fairness and certainty. Now, the parameters of that December agreement would have just seemed like an absolute impossibility just 6 months before. And you might know that the last tax bill, essentially before this, had a shelf life shorter than a carton of eggs. So you get a sense that people's kind of expectations were sort of down. But the December agreement worked out because of the approach that Democratic negotiators and Republican negotiators took to the job at hand. The end of the year agreement proved that Congress does not have to just automatically speed towards a fiscal cliff to reach a significant bipartisan agreement. When the talks began on this particular tax challenge, the members did not just go to the mat over the dollar figures or the baselines and all the things that automatically get elbows flying around. What we did is try to focus on some principles, again, not unlike what was done in '86, where people said, look, there are some specific priorities we have to have. Let's see if we can forge a bipartisan agreement, again, around taking each other's priorities that happen to make sense. Not ones that were bad ideas, but happen to make sense. So last December, my Republican colleagues pushed for certain business tax breaks to be made permanent. And this, of course, was as part of these stop-and-go incentives that have gone before and are known as extenders. And in talking to my colleagues, I said, you know, that research and development tax credit, I think that'd be a real win for everybody, because you already heard me talking about, small business, and the research and development tax credit often goes to pay the wages for those high-skill kind of jobs of the future. Marco Rubio drinks water, I spill it. And what we said is that we were going to get away from this kind of approach of just stop and go on a number of the key kinds of priorities. And we said that if Republicans were going to get their priority on permanent business tax cuts, we wanted the same thing for working families. That's how the agreement worked out. We said we needed the provision for the earned income tax credit and American Opportunity credit and the child credit. The Republicans said that it was important to them to have those two provisions in particular that I just mentioned. But everybody walked away with several reforms that, in effect, also set the table for tax reform in a comprehensive way, and that would really respond to concerns that the American people have. I mean, I have been telling working families now for months that other than the Affordable Care Act, the provisions that I just described, which affect 50 million people who are part of working families, that is the biggest anti-poverty program that the Congress has passed in decades. Other than the Affordable Care Act, there isn't anything that's even close. That was a real shot in the arm for working families. And as far as tax policy is concerned, it was the biggest bipartisan deal since 2001 that wasn't driven by some kind of legislative crisis. So, put me down as looking back at that November-December period when Congress kind of defied the odds. And everybody thought, well, we'll have another extenders bill and it'll last, 2 weeks, 3 weeks. But as I say, I think the analogy to the last one being shorter than a carton of eggs summed up the disgrace that this has been, where nobody has any predictability and certainty. So, the Congress, coming back to this, now has the work of this last November and December as a blueprint for broader reform to clear out the complexity. And my view is you start by radically simplifying the tax code, which takes you off with a strong start to building a better and fairer economy, one that gives everybody a chance to get ahead, and you keep going from there. And we're going to get as far as we can this year, working with the Obama administration and the next president to see these reforms through. And notwithstanding having damaged some of the property up here, let's go to questions. Softball questions especially welcome. But let's talk about what you're interested in for a few minutes. Then am I sitting here? Where am I?
Sit right there. Senator Wyden, thank you so much for your remarks, and I look forward to seeing the bipartisan tax reform bill that comes out next year. One thing that struck me when you were talking about going to a territorial system, which I actually think is probably in our future, whether we decide it's a good idea or not, just because it's the way the rest of the world has gone, is that it seems to be going in an opposite direction from the Democratic leaders, both Clinton and Sanders. Well, Sanders would repeal deferral, which is going in the opposite direction, saying we're going to tax all worldwide income currently. And Clinton does a lot to just try to bolster our current system, including some of the things you talked about, trying to stem inversions. How do you get your Democratic colleagues to sign on to a territorial tax system?
Well, first of all, Len, I am not talking about anything that resembles a garden variety territorial system. I'm starting with competitive rates and rewarding red, white, and blue jobs and getting rid of a lot of the incentives that tilt the landscape towards doing business overseas. And in effect, what I have just described is not very different than the bipartisan tax reform bills that I've written with Judd Gregg and Dan Coates. What I have described does not resemble a garden variety territorial system. It is quite different. And the reason I've called it territorial without the gaming is to make sure that everybody understands that territorial, as it's proposed now, will not win any support or any substantial support among Democrats, because what it does is basically says let's just keep going and create the incentives for doing business outside the United States. But, competitive rates, rewarding those who create red, white, and blue jobs, and getting rid of some of the incentives for doing business overseas, in my view, could be called territorial without the gaming.
Could you give me just an example of what you mean by rewarding businesses to create red, white, and blue jobs? Are you talking about new tax incentives?
Well, what I did in my earlier proposals was roll back deferral, use a significant amount of those dollars in order to create incentives for doing business in the United States. We keep foreign credits, but we roll back deferrals. So there are plenty of ways in which you can create incentives for doing business in the United States.
One of the things you talked about was trying to equalize the treatment of capital and labor. One salient feature of two of the three Republican frontrunner plans is that they would go in exactly the opposite direction and move towards a consumption tax where capital income is exempt. And the argument they make, I think, actually ties into one of the issues you highlighted right at the beginning, which is that workers are feeling very insecure. And they're saying that if we do this, there'll be a whole lot more investment in the United States, and that'll create jobs. That'll be good for workers. And they also say that basically it's becoming harder and harder to tax capital, whereas labor is a relatively fixed factor. How do you respond to that?
Well, I assume you're talking about the Rubio and Cruz bills. I mean, they double down on the inequality that you have today. They basically give more breaks to the well-connected and say somehow we're just going to tax working families with more regressive taxes, and somehow we're going to grow the economy and those people are going to do well. I don't think that passes the smell test, which is why I wasn't exactly subtle in describing that it would be more likely that I would play in the NBA than it would be to get bipartisan support for those kind of Republican
Although
proposals.
admittedly, you have the highest probability of playing in the NBA of any person in this room.
Well, when I was 21, I wanted to play in the NBA, and I was too small, and I made up for it by being really slow. So my chances didn't get better, but you get the drift.
Yeah,
Look, principled bipartisanship is going to be found with the kind of thing we did at the end of the year. For those of you that Len and Bill both just kind of took me by the arm and said, say something positive, say something positive. Everybody's been discouraging. Well, you saw something in December that says, look, there is a newly minted piece of tax legislation that defied the odds, that said, in effect, my party, and I have to admit I spent an enormous amount of time on it, I regard it as one of the most important things that we did. We improved the earned income tax credit, made it permanent. Same with child care, the American Opportunity Tax Credit. 50 million people who are working class benefited from that legislation at a time when Democrats are in the minority. Pretty much unheard of. That was what we sought to do. And by the way, I thought that the Republican ideas, there were several that I wasn't wild about, but the two major things they cared about, making permanent the research and development credit and 179 expensing. You drive through little towns in rural Oregon, practically 2 out of 3 businesses are selling things like farm implement equipment. They couldn't get realistic write-offs. So that's what we did. And that is sort of a small version of what happened. You were around for it in 1986. That's how we're going to do this.
So 86 was, and actually, I agree that this bill actually had, you accomplished, it was a big accomplishment as a bipartisan bill, but 86 was a revenue neutral tax reform. And the bill you passed at the end of last year was a pretty significant tax cut. I assume going forward, you're talking about revenue neutral, and it seems like that's harder.
I am not talking about revenue neutral. That's one of my principles. It's got to raise money for infrastructure. And by the way, and my wife says, Ron's almost incapable of uttering a sentence without the word bipartisanship. But this too has some bipartisan roots, and what we saw was Paul Ryan and myself and Senator Schumer and Portman and Senator Hatch, we all talked about what the possibilities, were at some length through much of this year. Now, we didn't thread the needle, and there are a variety of reasons for that, but I thought Chuck Schumer and Rob Portman made a lot of progress. The reason Chairman Hatch and I wanted him to do it was because we thought these were legislators that had the capacity to help us make some progress. And so I think, again, this is not going to be a walk in the park. This is a very different time than 1986. For example, one of my favorite parts of Gucci Gulch, the great book written about the 86 tax bill, there's an account, and I'm making this up, but barely, about how a group of legislators and others got together and they were really excited because they were going to get like a petition or something going. And they said, well, Billy Bob's going to pass the petition around and they're going to get umpteen thousand signatures within a week. And everybody claps them on the back and says, oh, that's great. That's the way to build a coalition. Well, when you do tax reform, in 2016 and 2017, if a special interest feels their ox is gored, they're going to go online in the social media and they are going to generate millions of emails and tweets and the like within 36 hours. So I'm not telling you that this is going to be, a walk in the park, but nobody would have bet that we would have produced that tax agreement that we did in December. I don't think anybody thought we had a shot when Chairman Hatch and I named those working groups at making any real progress. We made some real progress on the international side. So you can walk out of here and say, well, none of this is ever going to happen. But I'm talking specifics that I think really show that there is some reason to believe that you can get this done.
I have 100 more questions, but I have a feeling that there are other people who have questions too. So I'm going to turn this to the floor. Yes, back. Thank you.
Yes, Rebecca Sundin. My question is actually on entitlement reform, and a quick shout out to the Impertinent Economist blog on the liberal case for entitlement reform. Senator Wyden, in full appreciation of your bipartisan efforts, let's say if a Republican does win the presidency,
Not going to happen.
Not personally advocating for myself, and regardless of what that candidate, who that candidate would be, again, not advocating for Mr. Trump, what would you see are realistic bipartisan efforts that we can concede on entitlement reform? Particularly, what would you prioritize on the Democratic side? What are the points of willing to and willing not to concede? The softball version of that question would be, what are some lessons learned from the Healthy Americans Act?
Well, first of all, again, citing an opportunity to be optimistic. In the post-2010 period, and as Lynn noted, I was talking to people on both sides of the aisle about a variety of reforms. I was struck by the fact that during the debate about the Healthy Americans Act, both sides had largely missed what Medicare has now become. When I was a young guy and had a full head of hair and rugged good looks, I was director of the Gray Panthers, the senior citizens group, for almost 7 years. And Medicare then, I see my friend Alice Rivlin here, we've talked about this often, Medicare in those first days of the program was largely about people who spent quite a bit of time in a hospital if they were really sick. And then if you hurt your ankle, that was Medicare. If it wasn't a real bad injury, you went to your doctor's office, that was Part B. If it was a really serious injury, you went to the hospital, that was Part A. That is not Medicare today. Medicare today is about cancer, it's about diabetes, it's about heart disease, it's about strokes. it's about chronic illness. So in that kind of post-2010 period, I put together a bipartisan bill in the Senate with Johnny Isakson, then Peter Welch and Eric Paulson in the House. We were very lucky to have really 3 very committed professional, legislators. And we started saying to Democrats, as I have, this is a way to protect the Medicare guarantee. Because that's what Medicare is. It is a guarantee. Those are the words Democrats want to hear. But we also could say to both sides of the aisle, we're going to update this program. Because what I've described to you is more than 90% of Medicare spending. And yet, for millions of older people, particularly those not served by Medicare Advantage, after they have their free physical, thank you, Affordable Care Act, things kind of go off the rails until they end up in the hospital emergency room and can't even remember all the doctors and providers that they've seen. So Chairman Hatch, and I'm deeply appreciative of this, has put together a bipartisan working group in the Finance Committee, led by Mark Warner and Senator Isakson. We've been working very closely with them, and I'm hoping that before the summer break, we can really be on our way to real reform in what is far and away the biggest challenge in terms of the health programs. In fact, I go so far to say that if somebody shows up to talk about the federal budget and they don't talk about Medicare, that conversation is not on the level. It's that important.
Gene?
Hi, Senator Wyden. Gene Sterling from the Urban Institute. I have a question with respect to your simplification ideas, or at least an idea that I wonder what you would think of. So in 1987, after we had passed the 1986 Tax Reform Act, I suggested within Treasury that we make an effort at simplification, because in 86, despite the title, we did get some simplifications, like with tax shelters, but there are other areas we made more complex. And I thought, how about something just concentrating on simplification without all the other debates that revolve around tax reform? And simplification has never been the main item of tax reform, in part because there are so many other issues of distribution and size of government that always tend to dominate. So one suggestion I had then, and I wonder what you think of it, is how to provide some ammunition for it. And one piece of ammunition might be to try to require Treasury and IRS to report on almost every program that they operate, these $1 trillion of tax expenditures, what is really administrable, what's not, what has high levels of non-compliance, and what areas, this is very important, what areas can IRS not tell you what the compliance is, such as, say, gifts of in-kind goods and services where nobody really measures it well. I wonder if you don't need to back up a simplification plan, some real ammunition on what just does not work, and whether you have some ideas about how you might do that.
This is kind of like the NBA All-Stars of tax policy with Gene, Eric, and all these people here. I would definitely be willing to look at what you're saying, Gene, because as all of you know, Gene has spent a lot of time in these precincts. What I'm trying to describe is quite a different approach to tax simplification, and it's to some extent born out of what I've been seeing and reviewing polling and the like. When people think about tax simplification, often, not everywhere, they're mostly thinking about whether they can get some other device or turbo this or such and such that and get out from under the fact that they're giving their springtime away in terms of trying to find shoe boxes of records and the like. That is part of it. That is part of simplification. But what has emerged most recently, and there's some polling on this, that one of the reasons Americans are now so interested in tax simplification is they have decided that this really complicated system is what is helping the well-connected and influential to get all these sweetheart deals, and that's not fair, and very often they're paying for them. And they are right. So what I have been doing is telling people, yes, I'm interested in all of the sort of things relating to the administrative capabilities, and in both of my previous bills, we've had the process by which you wouldn't have to file and the like. I'm interested in all of those things, but I am mostly interested now in radical simplification to respond to what I call this tale of two tax codes. And I think what most Americans have come to feel when they hear about how the system is so complicated, they say it's another way for the well-connected to get a bunch of these dodges and collars and wash sales and derivatives and all of these exotic schemes so that they can figure out literally, those are the words I'm going to choose, they can figure out a way with good advice to decide what they're going to pay and when they're going to pay it. Not the way it works for somebody who once or twice a month has extracted from their paycheck what they owe. So I'm very interested because your ideas are always thought-provoking and valuable to look at anything you have. But that's what I'm talking about when I'm talking about radical simplification. Radical simplification that can take us on a path to a fairer system that gives everybody in America the chance to get ahead. If somebody just walks up and you say, Ron, what do you want in a tax code? I want an opportunity for everybody in our country to get ahead. I think it's the kind of inclusive kind of approach that's always been our country at its best.
Do you have time for one more question?
Sure.
Senator, the U.S. ambassador to China, your former colleague, chairman of the Finance Committee, Max Baucus, invested a lot of time into a topic known as the tax gap. What happened to the tax gap? Is that an issue worth pursuing? Is that a source of additional revenues? And to your last point, is it a way to improve the fairness of the tax code?
It really is, and in fact, we have put both the IRS and Treasury on notice that we are expecting to have them focus on this, particularly the corporate tax gap. And I think I've got everybody here. We're talking about $60, $70 billion. We are talking about substantial sums of money yearly in terms of money that's lost. And I think if the staff wants to nod, then I don't have to give the full answer. We asked them for a report on this here in a matter of months. So the tax gap is not gone, number one, and just in the last month or so, when we had both the IRS and the Treasury Department in, we cited some of the new figures. And in fact, not only is it a serious gap, we are not convinced that they even have their systems in place in order to figure out what are the major sources of it. So that fight is ongoing. More than anything, I so appreciate the good work that Brookings does. As I say, I can look around the room, and this is practically an NBA All-Stars of tax policy. And by all means, don't be shy about getting us your ideas and suggestions. And let's put this discussion in the to be continued department. Thanks for having me. I'm glad.